Many people have argued that Ford is a bad investment in that the better days are behind them, but I have a different outlook on that. And there are key primary takeaways as to why I think that they are a good investment going into the future, especially in the short term, but definitely in the long term when it comes to their dividend growth and overall growth of the company. The first primary reason Ford would be a great investment is their all-new Ford Bronco, and to go along with that, the all-new lineups of the F-150 and some other vehicles as well. So they're restructuring some of their vehicles to better compete against models like the Jeep Wrangler, Hummer. Everyone knows that GM just announced the Hummer EV, which has created a lot of demand, but the Bronco did sell out their reservations within 3 weeks of being available. They had already been at 165,000 reservations, and as of late October, we're at over 190,000 reservations. So there's definitely a lot of demand for this nostalgic type vehicle, but also Ford didn't really have anything going into next year for like an off-road type vehicle. Jeep Wrangler really dominated that realm, and this is going to definitely be a cash cow for the company. If I were to take a guess, it's going to be better margins than what they already get on their F-150s, and definitely like their midsize and small sedans as well. The second reason Ford is a good investment is their electric initiative. To go along with the new F-150 and Bronco models, they are debuting their all-new electric Mustang Mach-E, which definitely appears much different from the normal Ford Mustangs, but the reservation numbers on this vehicle are not even as close to as high as that of the Bronco. Of course, it is coming out a little bit later. It is on sale for around the price, a little above the price of a Model 3 from Tesla, but this is going to compete directly with the Tesla vehicles, and Ford does plan on coming out with new electric models of different vehicles already in their product lineup. And the final reason, the most important reason, is the actual research and analysis behind the stock and the company itself. First, I want to look at the Ford PE ratio, which is 8.24. When compared to a company like Tesla, which is over 100 consistently, you could definitely see the value in Ford only being at around $7.60 at the moment, $7.60 a share. That is definitely not to say that Tesla is way overpriced or a direct comparison with Tesla. This is just explaining the value of Ford in only being around $7.60 and fluctuating currently and recently around $7 to $7.60, $7.80. It's a really good value compared to their earnings. Now, their earnings have increased, and they actually reported a decent earnings report a couple weeks ago. Another reason for the great value is that their market capitalization is only around $31 billion right now, which seems very low when you consider that they have about $40 billion in cash. Granted, they have taken on quite a bit of debt, and they are paying a lot of interest in the billions on that debt each and every year, but they do have much cash on hand to invest in certain ventures like electric vehicles, new models, as we discussed previously. And so their cash position is very healthy as long as they can keep paying off that debt and see increasing income. It is very unpredictable, of course, with any company it is right now with the pandemic going on, but knowing that they have $40 billion in cash and they're not too worried about paying off that debt, that they're that confident in investing that cash somewhere else, is great outlook for the company, and it seems like they know what they're going to do with that money in the future. Warren Buffett once said to be greedy when others are fearful, be fearful when others are greedy. When you take that into consideration, when you look at these left numbers on the left here, they're very ugly. You're looking at about $2.5 billion in loss, and interest expense almost tripling interest income, and that's definitely showing of that massive amount of debt, over $100 billion that Ford faces. We are in the middle of that pandemic, so Ford has gotten rid of their dividend. Their CEO has said that he won't really make any comments on it until spring of next year. So that's maybe why the share price is hovering around 760 instead of being a bit lower. They're not just giving that money out. They're going to be able to pay down some debt, hopefully. But in terms of Warren Buffett's quote, obviously you shouldn't fully depend on that. But we can see that Ford is in a really rough spot right now in terms of maneuvering their actual revenue into income. Their expenses are just exorbitant compared to their gross profit. So if there's any way they can spread those margins, which I'm optimistic they can, especially with these new initiatives, as I mentioned in the first and second reason, they should be able to increase these margins and therefore increase their net income, possibly bring that back that dividend and keep growing that dividend. That being said, Ford did report earnings and they absolutely obliterated Wall Street expectations in terms of earnings per share at 65 cents per share versus 19 cents expected, as well as revenue of 34.71 billion versus 33.51 expected, so well over $1 billion more than the expected amount. Profit was 2.34 billion during the third quarter, up from about 423 million a year earlier. And revenue also increased by about $500 million. So we can definitely see that Ford is turning things around in the midst of this pandemic. And it's only a matter of time that they release these electric vehicles. They release the Ford Bronco, the new F-150. The biggest thing with these three vehicles alone is they are going to be cash cows, have wide margins, and will help Ford expand into the future and pay down some of that debt. So that being said, one of the biggest concerns Ford does have right now is that debt that they're carrying. It's over $100 billion. So when you look at profit in the quarter of $2.3 billion, yes, that's great, but they need to level that off with the debt. On top of the three reasons just provided, the new CEO, Jim Farley, has promised an electric future for the company. Of course, we're starting that off with the Mustang Mach-E 2021 model, and eventually that's going to move into, the best-selling vehicle, F-150, the Ford Bronco, probably the Explorer as well. So we're going to start seeing all these different advancements in these models that have always been successful and have been the cash cows for the company. So going into the future, when you think of it from a futures perspective, you could definitely understand that Ford has that money. They have $40 billion to invest in this, and it is the CEO's commitment. The CEO has restructured the executive portion of the company, and that includes the CFO as well. So they're making these executive level changes to definitely coincide with the changes they want to make in terms of their vehicle lineup. Finally, I just wanted to mention, Ford has economy of scale. They have manufacturing plants all over the place, all over the world. And so, they already have half the investment in these manufacturing plants where They'll just have to make some changes to correspond with their future goals. But half the battle is already fought, and they just need to allocate the funds to actually advance these initiatives. And so, of course, that is a bit of optimism at play there. But when you consider, again, what the company wants to do in terms of the CEO standpoint and his main focus for the company to go electric, who they're going against, there are stiff competitors right now in terms of Tesla. GM now has entered the game, and some other models like or manufacturers like Neo, even Candy of America, and other companies like that. But Ford has that scale to be able to make all their vehicles electric. So all these successful flagship vehicles that have been out for decades, selling very, very well. Even if they're to keep a gas model, electric models will still sell. And over time, it's just going to snowball, and more electric vehicles will be sold. What that means as well is that Ford, again, with their scale, they're going to be able to drive down the prices of batteries and total manufacturing costs of their vehicles. So that is very important when you consider a company such as Tesla, who has been building their scale the last few years and has kind of ran away with the electric vehicle game. But they're slow in terms of moving into different things such as the pickup truck, a large SUV for a family, and just bigger vehicles like that. Of course, we know that's where the company is headed. So with Ford being a main competitor and having that scale to be able to, let's say, make an electric Ford Bronco, an electric F-150, an electric Expedition, or Ford Explorer, that's a big deal when you consider how successful Tesla has been just in the few models they have created so far, and the few models made from the other manufacturers as well. One thing you can also consider, just as kind of a guaranteed almost, of course nothing ever is, but Ford dominates fleet vehicles. They dominate law enforcement fleets. Amazon has large orders from Ford for their vans, and all of these mass orders that they will have on hand when they have enough of these electric vehicles is definitely going to help with, again, increasing their margin and eventually over time driving down their manufacturing costs, which, based on those numbers from earlier, is one of Ford's biggest struggles. Is their cost of goods is just way too high compared to their margins. So when you take into consideration their manufacturing costs, cost of goods sold, it can literally take their net margins from positive to negative, which, I mean, negative 1% is a couple $1 billion. So of course, there's a little bit of optimism in there, but I did want to present this from a fun side in terms of, moving into the electric vehicles, offering new vehicles such as the F-150, Ford Bronco, but also kind of giving you the numbers to kind of see for yourself that Ford is in a rough position right now, but they have these initiatives that they're starting that can get them in a better position in the future and eventually increase that stock price, get that dividend back. By the way, it was 15 cents per share before they revoked it earlier in 2020. Again, that's expected to come back next year. Nothing's ever guaranteed. I do want to finish this by saying that I am not in any way a financial advisor. I do have my MBA. specialize in finance, have grown my own portfolio, and I just generally enjoy the Ford company. Maybe a little biased there because I prefer Ford, but at the end of the day, I do prefer to make money on stocks and am a dividend investor. So even while Ford is not offering their dividend right now, I'm just buying a few shares here and there at a time. So that's because I do feel that the stock price will go up eventually. They'll bring back their dividend, and times will be good from here on out. Fortunately, I have bought it at the lower price when COVID started, so it was part of that quote from Warren Buffett to live by in terms of being greedy when others are fearful, and to be fearful when others are greedy. When March happened and all the stocks fell, this is a perfect time to get in. Now it's just time that the company itself has to turn some things around and come out with a performance. Please like this video, subscribe if you want more analysis, and definitely leave a comment down below if you want any questions answered. Thank you.